Hey guys, and welcome back to another video. So this is going to be episode 3 of the macro workshop series. So let's get right into this one. So for today's focus, we want to focus on these main 4 points. Number 1, building narrative, logical turning points, high probability breakers, and then of course, macro power of 3. Okay. So with building narrative, just like everything else in our trading, we want to strive for simplicity. Okay, so the main things that we want to look for when trying to build our narrative are, okay, what is the higher time frame trend? Do we have a clear dealing range? After we've established point A and point B, do we see clear manipulation? And then ultimately, again, reversal signatures. So a common checklist for this, especially in these market conditions and for the price delivery that we're going to be breaking down for today's lesson, higher time frame trend is bullish. So when we want to see a good long reversal setup, right, we want to look for price to drop down into a discount of a clear dealing range. Okay, and by extension, for manipulation, we want to see sell side swept, which is of course opposed to that bullish narrative, that bullish higher time frame trend. And lastly, for our reversal signatures, as usual, we want to look for our macro power of 3 entry criteria. Okay, so episode 1 and 2 of the macro workshop series, and even sometimes whether you guys are in Discord or on Twitter or some lessons here on YouTube, if I'm breaking down lower time frame delivery, specifically the 1 minute time frame, the majority of the time with macro power of 3, those scenarios are to train your eye, and lower time frame signatures are important. You can do a lot with just lower time frame price delivery and algorithmic order flow, etc. Macro power of 3, but the overarching narrative, higher time frame direction, dealing ranges, etc. come before that lower time frame delivery. Okay, so if we can clearly establish the higher time frame narrative and then we receive from the market a lower time frame setup in line with that higher time frame narrative, that's when we see the best trades. Okay, and we want to be in the best trades, right? So continuing forward, okay, let's talk about logical turning points. All right, so again, if we've established that the higher time frame trend is bullish, we want to look for a clear dealing range. So if we're bullish and we have premium and discount, we have this higher time frame dealing range, where do we want to see price go? And by extension, where is the most logical turning point? Well, of course, in a discount after sell side is swept, and ideally during a macro. Okay, so this is time and price, right? Understanding trends, seeing manipulation and a discount, sell side swept, but the time element of it, of course, is that X50 to X10 macro window where we want to see specific levels worked and specific reversal signatures to ultimately trigger a trade entry. Okay, so let's move forward and actually get into the chart. So this is NASDAQ NQU 2025. We're utilizing, of course, the September contracts, and this is the weekly time frame. Okay, now as you can see here, looking at this weekly chart, I want to look at what it looked like after yesterday's or Monday's close. Okay, but in the upper left-hand corner here, you can see we're going to be analyzing delivery from Tuesday. Okay, and if you guys are watching in this week, when this video is released, 6/22/25. Okay, so you guys probably recall some of this price delivery. All right, but we're going to break down delivery from this day just so we're clear. Okay, but for now, I want to talk about how we can build higher time frame narrative top down, leading all the way down to a trade execution. Okay, so if we're looking at this weekly chart, the first thing that we want to identify is trend, right? Well, obviously, we're extremely bullish and price is at all-time highs. Okay, so there's no question about this higher time frame order flow. It's bullish, right? So the highest probability trades, would they be longs or shorts? Well, longs, of course. Okay, and even having that as a filter, when we're so clearly delivering in one direction on the higher time frame like this, the majority of your trades should be in that direction. Okay, and that'll keep you out of a lot of trouble. It doesn't mean I'll never take a short. It just has to be clear and have, again, narrative and logic behind it on the lower time frames, playing some sort of manipulation leg. Okay, but that's for another video. Okay, so if this is Monday's close and we've established not only the trend, but then the clearest dealing range from this low to this high, Monday's close, which is the current all-time high, right? If I understand and, in my own trading, have the framework of, okay, the best longs come after delivery for, delivery to discount, does that mean I need to wait for price to drop? Look over here. Monday's close, 23,347. Equilibrium around here for this large dealing range is 20,000. Does that mean I need to wait for price to drop 3,000 points, right? And even more than that down to discount, and then just to look for a long here for this trading day or, the rest of the week? Of course not. And that's not realistic. Okay. So I need to, which I've discussed on this channel before with you guys, I need to start to refine this dealing range to understand where a more likely turning point could occur if we do in fact see a retracement away from all-time highs. Okay, so let's progress. So this is still the weekly chart. We're just zoomed in here. So a lot of you guys would probably look at this weekly chart still after Monday's close, preparing for Tuesday, and utilize this as your dealing range low. I mean, this weekly low, this weekly low, this weekly low, those aren't swing lows until this one. This is the last swing low in the obvious, most aggressive and most recent displacement upwards. Okay. But still, if last Monday's close is 23,347 and EQ of this larger range too as well is all the way down here, we'll call it 1,000 points. For Tuesday's trading, do I want to see, is it a strong scenario if price drops all the way down 1,000 points or more all the way down here to this discount, then for me to look for a trade reversal? No, right? So I want to see if there's any logical places that I could refine this more. And for this, I'm going to utilize previous week's low, a time-based low, which of course is just the low of last week. Okay. And for the dealing range high, whenever we have a case like this where we're expanding so clearly in one direction, I'm just utilizing the most recent high for my dealing range high. Okay. When we're bullish, of course. And now when I look at equilibrium of this range, and once we go to lower time frames, this refined dealing range will look a bit more clear instead of just previous week low, which is still good enough, but we'll see that on the lower time frame. But now if we look at that Monday close, 23,347 and 23,114, equilibrium of this most recently refined dealing range, it's a bit more reasonable for price to retrace down here. Okay, now when we've established this dealing range still on this weekly chart, we want to then look for KRPs or key reference points where price could bounce off of and just look for as much confluence as we could. So already 23,114 even, this equilibrium of this higher time frame dealing range, is a key reference point, a place that if we do see price come down into, we want to see if we are given our reversal signatures off of this level. Okay, now on top of this, staying on this weekly chart, this is a bullish immediate rebalance, right? So this looks like a fair value gap, just not to confuse anyone. The weekly chart is still panning out, right? We're breaking down delivery from Tuesday. So this isn't closed yet. So this isn't a fair value gap, all right? So that's not a PD array that I would utilize here, just so we're clear on that. Maybe some of you new folks are wondering that, but this isn't a fair value gap yet on this weekly chart, okay? But if I see price show a willingness to get down to equilibrium, and then I also have this upper wick from here overlapping almost to the tick with equilibrium of our established dealing range, that makes this area even more sensitive for me to monitor for a reversal if we do in fact deliver down there. And we know I've discussed it time and time again on this channel and in reviews when it's applicable, how strong of a signature the immediate rebalance is. Okay, and couple that with just the overarching narrative that we've understood by this point. We're at all-time highs. We've been extremely bullish. So this is an extremely sensitive place for us to monitor. Now, if we progress to the daily chart now, what else do we see? Now, we do have a daily fair value gap here. And more specifically, refining that level, CE, consequent encroachment, or simply put, 50% of that fair value gap, where is that overlapping with? The weekly immediate rebalance and equilibrium of our established dealing range. So this is an extremely important, significant level for us to watch for a bounce from. Okay. Now, on top of this, if we've, going back to our first couple slides for today's lesson, established a clear higher time frame trend, we've identified a clear, refined dealing range that seems likely for price to draw towards if we do start to see some sort of retracement. What else on top of the key reference points, what else do we want to see relative to where that manipulation could occur? Well, we have previous day low here. Okay, you see Tuesday's open, and we have last Friday's low here. So we have two daily lows. Where is that, or are those two daily lows residing? Above those three key reference points that we just established. So see how we've built a narrative to understand that it's not a crazy scenario or idea to anticipate price to deliver down here. Now, does that mean I have to play that leg? No, I don't. It doesn't mean I have to. Okay, now if I'm at the charts and I see a setup and it's super clear, yeah, I will, but I wasn't at the charts for this and my model wasn't there, for this manipulation leg. So it's fine to let this go, especially because if you're waiting to see if we're going to reverse after delivering to these key reference points and sweeping these daily lows, that would be a long setup, right? And that's in line with the higher time frame direction. Okay, so let's progress now to the 1 minute time frame and see what transpired here. Okay, so we have 9:30 open, we're going below 9:30 open. We have midnight open, we're going below midnight opening price. We're below Tuesday's opening price as well, as we saw in the previous chart, right? And just again, you guys know, we want to see for the best buys, price go below those key opening prices, as well as what? Macro opening price for macro power 3, which we will get to, of course. But what do we see price doing? It's heavy during the opening range. Right before the macro, it's purging previous day low. And then right at the start of the macro, it zooms down to take care of sweeping Friday's low as well. So we're seeing that manipulation, but understanding what we've established on the previous slides on the higher time frames, we understand that what? This is equilibrium of the higher time frame dealing range. And it's not that far away, right, from that Friday low. So we want to see price go to and through that Friday low, previous day low, of course, by extension, to trap shorts and deliver to our key reference points, and then see if we see a setup off of these levels. Okay, so already we see a wick away / another way to put it, the body's respecting equilibrium of our higher time frame dealing range. Now progressing forward, this is again all in close proximity, the weekly bullish immediate rebalance, this bottom black line, okay, and then daily BISI CE or 50%, right? Those three levels, the bodies are respecting all three of those levels. Now, when are these higher time frame key reference points being worked? During this macro window. So this is KRPX macro, and this is what we look for and we talk about on this channel, and I utilize in my trading on a day-to-day basis, right? These are the signatures, exactly what I look for. Okay, so again, in episode 1 and 2 of the macro workshop series and other videos as well, and in the future going forward, if you see me just talking about just lower time frame delivery, it has a overarching narrative to it, right? But for episode 3 here, today's lesson, I really wanted to break down this higher time frame narrative and then see how the inception of a turning point, right, is born off of these higher time frame levels. Okay, so clear manipulation, discount of the higher time frame dealing range, key reference points, and then we start to see our macro signatures. So not only are we seeing the bodies respect these higher time frame key levels, but we're seeing a macro SMT into those key levels during a macro window. So again, at its core, this is time meeting price. And this is what we want to look for. Okay, and this should really be light bulbs going off in your head when you start to see these signatures start to stack on top of each other in real time. Okay, now if we have an SMT, this is a low, a high, a lower low. These two consecutive up close candles are what? A breaker. But more specifically, because of the SMT and during a macro, this is a high probability bullish breaker. So this grabs my attention, and this is what I'll utilize for my trade entry. Okay, and just as a side note, we do have these 3, 4, maybe 1, 2, 3, 4, 5 consecutive SIBIs. If I was to wait for that inversion, price would be all the way up here already, and I don't want to wait for that. So this close, which we'll get, spoiler alert, this close above this breaker is enough for me, to enter a trade here and anticipate a move upwards to a specific objective, which we will talk about in a second. Okay. So this is our high probability breaker. We do close above. And now let's talk about where price can go. So 950 macro, turning point, close above, push upwards, retracement, and then look at the bodies just respecting the very top of that breaker. And it's not spending a lot of time down here. It can't even reach for 50% of the breaker. And that's what we want to see for these high probability PD arrays. Okay. Price comes down into it, expands higher. Now, what is the objective here? Let me go back to the previous slide. This was a large sell-off. Like now, is it ideal if price goes all the way up here? Yeah, of course. That's why we hold runners. Okay. But as you guys probably all know, it's not always going to go all the way up there. So we want to take partials and or just the majority of our position off at logical levels and not get greedy. So going back to this slide here, what do we have? We have the new week opening gap, which again, this can be your homework, I guess. Go for the opening range and draw your fib from the opening range high to this low here, and you'll see that 50% is stacked right on top of this new week opening gap. But go see that level for yourself. Okay, so we don't require price to go all the way up to the opening range high and beyond and rip 400 points or whatever, home runs only, to be consistent in our trading and be successful in our trading ultimately, right? We don't require that, and you don't need it. Okay, so if we have this new week opening gap right here with the just mentioned premium of the intraday range right here, this is a very logical and safe place to take partials at, because just in case we're wrong, we could reject off of this. And we ultimately did just reject and kind of chop around the rest of the day, right? We didn't get that move all the way up to opening range high, okay? But this is how we see time meeting price and how we build narrative, how we understand simple things like higher time frame trends, right? Once we've established that, where's the clearest dealing range that we can refine and look for that 50% level? After we've established that, are there any higher time frame levels overlapping specifically with equilibrium, or are there any other higher time frame levels in just a bit of a deeper discount that price could want to reach to beyond equilibrium, right? And it's all just about thinking in terms of probabilities and what I mentioned earlier, just logical turning points. Where does it make sense for us to turn, right? If we've been bullish, well, in a discount off higher time frame levels after sweeping clear sell side liquidity, in this case Monday low and last Friday low, and ideally during a macro, right? So time meeting price, same thing on a day-to-day basis, right? So going forward with any model, even macro power 3, you don't just want a pattern trade, right? Macro power of 3 is going to be much more powerful, much more useful for you when it's in line with sound logic and higher time frame narrative and narrative for that intraday session, whatever you're trading. So as always, I hope you guys enjoyed this video. Let me know if you have any questions in the comments, and I will talk with everybody soon.